In the high-stakes world of technology, even giants can fall. The US and China are locked in a fierce battle for tech supremacy, and the consequences are global. At the center of this clash stands Nvidia, the world's most valuable chipmaker, controlling over 80% of the AI chip market. Recently, the US government blocked Nvidia from selling its most advanced chips to China, aiming to slow Beijing's technological rise. In response, Nvidia developed a new chip, the H20, specifically for Chinese tech giants, hoping to keep its foothold in the market. Nvidia poured billions into this project, betting on continued business with China. But then, a US Commerce Secretary made headlines with a bold statement on national TV. When asked about selling chips to China, he said, "We're not selling them our best product, not the second best, not even the third best." China immediately rejected the H20, refusing to buy what they saw as a second-rate chip. President Xi Jinping responded, "Build your own advanced chips and use them." So, who lost in this high-stakes game? The answer? Nvidia, the world's largest chip company, caught in the crossfire of a global tech war. Do you think tech bans help or hurt progress? Tell us in the comments below. Whose stock price took a beating? Nvidia's, an American company. But it didn't stop there. Apple, Tesla, and even small electronics brands felt the sting. And it's not just tech giants. American farmers, automakers, and clothing companies are all caught in the crossfire of this trade war. President Trump rolled out his giant tariff board, pushing the global economy closer to a cliff. Animated charts showed tariffs rising on everything from soybeans to smartphones. For a while, the debate on tariffs had gone quiet. But fresh U.S. economic data reignited it. Pop-up headlines flashed across news screens. Tariffs were meant to protect the American economy. Instead, they're backfiring. Prices on electronics, groceries, and cars are rising for everyone. The U.S. dollar is falling. The government is collecting record revenue from tariffs. But unemployment is rising. Animated infographics show the trends. So why does none of this make sense? Let's break down how tariffs actually work and what Trump wanted them to achieve. Here's a quick poll. Have you noticed price increases on electronics? Vote now. When a country imports goods, it sends its currency abroad in exchange for products made elsewhere. Think of buying a smartphone or a new TV. Sometimes, to protect local jobs, governments impose tariffs, import taxes. This is supposed to help local businesses compete. This makes imports more expensive. Consumers buy fewer foreign goods, and local businesses face less competition. But it's not always that simple. In theory, this should boost local production and keep money circulating within the country. But in reality, things don't play out the same way. Here's a fun fact. In 2023, US-China trade volume topped $690 billion, making it one of the world's largest trading relationships. At the start of 2025, the US dollar index was at 129 points. By June, it had fallen to 120, the steepest first-half drop since the 1970s. Why? At first glance, tariffs should have strengthened the dollar by boosting demand for US products. But the opposite has happened. The biggest reason? Falling trust in US economic policy. Investors are nervous, and that's bad news for everyone. A weaker dollar means American capital is being sold off, made cheaper compared to foreign currencies. That's not a win. In the first half of 2024, the U.S. collected about $50 billion from tariffs. By the same period in 2025, that number had doubled to $100 billion. U.S. Treasury Secretary Scott Bessent says it could cross $300 billion by the end of 2025. But is this a jackpot for Americans? Absolutely not. It's the American people who are paying the price. These tariffs are essentially huge new taxes on you, me, and everyone else. And there's another casualty: jobs. Tariffs were marketed as policies that would protect American jobs and even create new ones. For a while, that seemed true. 144,000 new jobs in May, 147,000 in June. But then came the July report. Only 73,000 new jobs, far below the expected 115,000. Worse, revised data later showed that in June, only 14,000 jobs were actually created, and in May, just 19,000. What do these numbers tell us? They expose the failure of Trump's tariff policies. Jobs are falling because tariffs act as a massive tax not just on consumers but also on businesses. Most U.S. imports are intermediate goods, raw materials and components used by American companies. When tariffs raise the cost of these materials, American businesses become less competitive against foreign rivals. That hits job creation and economic growth hard. And this isn't the first time tariffs have failed. In the 1980s, tariffs on sugar made prices skyrocket. Coca-Cola had to replace sugar with high-fructose corn syrup to cut costs. In 2002, George W. Bush imposed tariffs on steel to protect U.S. producers, but it backfired. Steel-using industries like autos and construction lost jobs and profits. In Trump's first term, tariffs triggered a full-blown trade war with China. Both sides retaliated, prices rose, and U.S. exports fell. So what's different this time? Things are even worse. Now, tariffs are being increased by an average of 19% across almost all trade. In recent years, U.S. trade has exceeded $3 trillion. A huge chunk of this is with China, around $400 billion. But now, tariffs will hit an even larger share of trade. This means that instead of affecting a $500 budget for a family, tariffs will hit a $2,500 budget. That's devastating for consumers. So next time you see a price tag on your favorite gadget, remember, tariffs are more than just numbers. They're real costs for real people. In the short term, tariffs can look like a win, like tossing a stone into a pond and seeing a big splash. But that's just the start. The real effects are the ripples, spreading out, touching every part of the economy, from producers to consumers. Right now, those ripples are making everyday life more expensive, at the grocery store, at the gas pump, and online. The damage is simmering beneath the surface, like embers under ash, waiting to flare up. The volcano hasn't erupted yet, but the lava is bubbling. The real eruption could come later. Have you noticed prices rising where you live? Share your experience in the comments. Your story matters. We'll bring you more updates soon. Subscribe for deeper explainers on trade, policy, and markets. Tariffs brought headline numbers, but the underlying cost is paid by consumers, workers, and producers. In the long run, the ripple effects are what change economies. We'll follow the data and bring you balanced analysis. Stay curious, stay critical. We'll see you next time.